Okay, let's unpack this. You've handed us a stack of sources, articles, research, notes, all providing a glimpse into the crypto and Web3 world, specifically on June 16th, 2025.
Right, just a single day's worth.
So our mission in this deep dive, to basically go through this collection and pull out the absolute most important nuggets of knowledge for you.
Yeah, give you a shortcut to understanding what was happening across different fronts on that particular day.
It's like taking a single frame from a very fast-moving movie, isn't it?
That's a good way to put it. We have headlines and blurbs touching on market movements, regulatory shifts, legal challenges, and project updates, too.
It's a diverse mix from one specific moment in time.
Definitely.
And the headline that immediately caught my eye, the one that really jumped out from the stack, was Chainlink Price Prediction 2026. Can Link hit $41.79 as Qubetics reshapes the Web3 world?
Yeah, that's quite a statement.
Yeah, that's a specific claim, isn't it?
It certainly is. That headline, found within the material you provided, points to a significant price target for Illene being discussed, potentially reaching $41.79 by 2026.
And it links that potential move to another project, Qubetics, suggesting it could play a role in reshaping the Web3 space.
Exactly. But here's the thing.
Yeah. What's the key detail from the sources here?
Well, while this headline and title were present, the detailed analysis explaining the methodology behind that $41.79 prediction, or how exactly Qubetics reshapes Web3, that wasn't included in the text we have.
Okay. So it's presented more as an intriguing forecast being circulated within the space on that day. Like, people are talking about this.
Pretty much. Which tells us that despite the lack of detail in our specific sources, there was certainly ambitious price talk around established assets like Illene.
Right.
And buzz building around newer projects like Qubetics on June 16th. It sets a tone of speculative excitement we saw echoed in other market points, too.
Absolutely. Moving through the rest of the market-focused information in the stack, we saw mentions of Pepe Coin, PEPE.
Ah, yes, PEPE. The reports indicated it was regaining momentum.
And there was another specific prediction there, wasn't there?
Yeah, one blurb suggested a new PEPE all-time high was expected in Q3 of that year.
Q3. Okay.
Interestingly, that same blurb noted that alongside the PPE buzz, some investors were apparently looking into an under-the-radar DeFi token, referred to as Mutuum F in the text. M-U-T-U-U-M-F.
Got it. Something else bubbling under the surface.
Seems like it.
Then we got to some of the more technical market analysis that traders watch. Solana, SOL.
Right. SOL was described as hovering right near its $140 support level, a key level.
And the potential risk highlighted in the material was significant.
Yeah, very. A break below that $140 mark could, according to the analysis, send the price tumbling towards the $100 zone.
Oof, that's quite a drop.
It is. And the technical indicators being watched, like the MCD turning negative and the RSI sitting at 40.03, these are tools traders use to gauge momentum,
Right, standard indicators.
They were described as showing weak momentum and market indecision right at that moment. Volatility was definitely a factor mentioned for SOL.
Okay, so uncertainty there. What about Bitcoin, PTC? The big one.
BTC was also at a critical juncture, according to the sources, testing a 106K breakout level.
$106,000.
Wow! Yeah, the reports noted Bitcoin was trading within a triangle pattern. Imagine price bouncing between converging lines on a chart.
Yeah.
Its recent bounce from the lower trendline support near 103K was seen as a potentially bullish sign.
So some hope there.
Some hope, yes. The anticipation was that a confirmed breakout above 106K could trigger an upside move towards $110.
Towards $110.
Especially if trading volume picked up to support it. Volume is key.
Always. So putting all these market points together, the specific price targets for Link, the predictions for PPE, the crucial support resistance for SOL, BTC at this breakout point, the technicals.
Okay.
What's the core nugget about market sentiment and activity we can pull from this June 16 snapshot?
Well, I think the insight here is that it was a market kind of pulled in different directions.
How so?
You had clear speculative energy targeting specific alts like Link and PPE with ambitious predictions suggesting, maybe retail excitement.
Right.
But at the same time, the foundational assets like BTC and SOL were grappling with these really crucial technical levels, which highlights a market that was also cautious and dependent on breaking key junctures.
So a mix of hype and technical reality.
Yeah, exactly. It shows that blend of hopeful speculation and technical reality sort of clashing in real time.
That's a great distillation of the market pulse. Now, let's shift gears a bit. From the price charts to the environment, these markets operate within the regulatory and legal landscape.
Right, because that always matters.
We found some significant news there, too, in the sources.
We did. One headline reported that the U.S. Securities and Exchange Commission, the SEC, had withdrawn 14 proposed crypto rules.
14. That seems like a lot.
It does. And the source specifically mentioned this action took place under the leadership of SEC Chair Paul Atkins.
Paul Atkins.
Okay.
And what did the source say this signaled?
Well, the material you provided claimed this move by the SEC signaled a significant shift in the agency's overall approach to overseeing digital assets.
Significant shift.
It was presented as a notable change in regulatory direction, at least according to that article.
Okay, important context there.
Yeah.
Now, moving to the legal front, there was a powerful headline. DeFi on trial, specifically regarding the Tornado Cash case.
Yeah, that's a big one. This refers to the founder of Tornado Cash, Roman Storm,
Right.
who, according to the source, was facing a trial scheduled for July on money laundering charges.
A July trial. And the potential implications of this trial, as highlighted in the blurb, they sounded massive.
They really did. It suggested the case could fundamentally redefine key concepts within the U.S. legal system. DeFi itself, open source software rights, and the very nature of crypto privacy.
Redefine DeFi, open source, and privacy.
Wow.
Yeah.
It underscores that this wasn't just a case about one individual. The report saw it as a potential landmark trial.
The landmark trial.
With the power to set precedents that would impact core principles and technologies across the entire crypto space as those concepts were being put before a court.
Okay, so connecting these 2 points then, the SEC potentially pulling back on regulations under new leadership, as reported, and simultaneously, the judicial system potentially setting major precedents on core concepts through this Tornado Cash trial. What's the key insight from this regulatory and legal snapshot on June 16th?
The nugget here is the stark contrast, maybe even potential conflict, right?
Know what I mean?
You have one branch of government, the regulator, appearing to shift towards potentially less interventionist stance by withdrawing rules. Again, according to the source.
Right, important caveat.
But simultaneously, another branch, the judiciary, is actively engaged in a process that could redefine fundamental technical and philosophical pillars of the space.
So pulling in opposite directions almost.
It suggests a legal and regulatory environment that was highly dynamic, possibly contradictory, and certainly in flux on that day. Lots of uncertainty.
It paints a picture of the external forces at play, definitely. Now, let's look inward at the ecosystem itself specifically. What the sources mentioned about project development. Let's focus on Cardano, AGA.
Okay, Cardano. The reports pointed to development momentum within the Cardano ecosystem.
Momentum. Did they give specifics?
They did, yeah. They cited rising on-chain metrics as evidence.
And we got specific numbers, which is always valuable. The number of delegated wallets on the Cardano network reached 1.33 million.
Yes, 1.33 million. And the sources specified that figure represented a weekly increase of 0.04%.
Okay, so steady growth.
Seems like it. They also noted continued growth in the total number of native tokens being created and used on the network.
What do these specific source metrics tell us about activity and growth happening within the Cardano ecosystem on this particular day, June 16th?
Well, they provide concrete data points suggesting steady organic activity and expansion. You know, an increase in delegated wallets means more users are actively participating in the network's security and governance through staking.
Right, participation.
And growth in native tokens shows builders are continuing to launch projects and assets on the blockchain. The insight is that while markets are volatile and regulations are being debated, the underlying development and usage of certain networks like Cardano were continuing on a measurable upward trend. Quiet building happening.
Okay, so we've taken this single day, June 16, 2025, and pulled threads from across the crypto and Web3 landscape based on the sources you provided.
You've covered a bit of ground.
We looked at the market-ambitious price predictions for Link and key technical levels for SOL and BTC, and the underlying sentiment they suggest.
The mix of hype and caution.
Then we explored the regulatory and legal environment, the SEC withdrawing rules, the potential redefinition of core concepts through the Tornado Cash trial.
Yeah.
Big external pressures.
Huge potential shifts there.
And finally, we checked in on specific project development, using Cardano's on-chain metrics as an example of measurable ecosystem growth. The building continues.
Right. It's obviously not every single piece of news from that day.
No, of course not.
But by pulling these specific nuggets from different corners published on that single day, we get a multifaceted view of how much is happening simultaneously in this space. It's kind of dizzying.
It really highlights the complexity and the speed of change, doesn't it?
Well,
Which brings us to a final thought for you, the listener, to consider building on this snapshot we've just unpacked.
yeah, think about this picture from June 16, 2025. You've got market participants chasing ambitious price targets.
The LNK number, the PPE-ATHI.
And watching critical technical levels like SOL at $140 or BTC at 106K. At the same time, you have the fundamental rules of the game potentially shifting with regulatory actions.
The SEC withdrawing rules.
While simultaneously, the courts are grappling with defining the very concepts underpinning the technology, like in the Tornado Cash case.
DeFi, open source, privacy.
And beneath all of that, builders are quietly adding users, like with Cardano's delegated wallets, and creating new assets on the networks.
So given the simultaneous mix of speculative ambition, technical caution, regulatory uncertainty, legal challenges, and quiet underlying development all happening on the same day,
Yeah.
what does this collage tell you about the inherent, perhaps chaotic, nature of the crypto and Web3 world? And maybe more importantly, how do these seemingly disparate forces actively shape its direction, not just on that day, but moving forward?
It's a lot to consider, isn't it, how they all interact?
Definitely something to chew on.